Safety Manager. From Zero to Expert by Dmitry Borovoy. IFTA, the fuel tax everyone fears for no reason. Chapter 8. IFTA, the fuel tax everyone fears for no reason. In this chapter, you'll learn how to gather source data, loads, fuel, miles, calculate the quarterly return, handle the 4 special states, New York, Kentucky, New Mexico, Oregon, and understand why an IFTA audit isn't a catastrophe. It's a question of neat folders. 8.1. What IFTA is and why it exists. IFTA, International Fuel Tax Agreement, is an agreement between 48 U.S. states and 10 Canadian provinces. It lets a carrier pay fuel tax under a single license instead of buying a separate permit in every state. Before IFTA, a long-haul driver's life looked like this. You drive Chicago to LA, cross 7 states, and need a separate fuel permit in each one. Separate paperwork, separate line, separate payment. The industry was burning through millions a year in pure admin cost. IFTA killed that setup. Now, the company registers in its base state, the state where the legal entity is registered. Once a quarter, it reports to the base state for all states at once. The base state itself redistributes the money among the other states. 1 license, 1 report, 1 payment. The rest is interstate bookkeeping. Not your problem. Who needs IFTA? 3 conditions at once. 1. The company is registered in a member state. 2. The truck crosses the borders of 2 or more states or provinces. 3. The truck is a qualified vehicle, 2 axles and GVW over 26,000 pounds, or 3 or more axles regardless of weight, or weight over 26,000 pounds. Any standard Class 8 truck qualifies. If you've got even 1 truck that leaves its home state, IFTA is mandatory. Deadlines. Write them down and stick them above your monitor. Quarter period deadline. Q1, January-March, April 30th. Q2, April-June, July 31st. Q3, July-September, October 31st. Q4, October-December, January 31st. 1 miss, late fee. 2 misses in a row, suspension of the IFTA license, then problems with registration and MC authority. Right now you're being buried under indexes, formulas, surcharges, 4 special states, audits. And the thought in your head is, I can't handle this. You can. Here's why. In real work, 80% of IFTA is routine paper collection, BOLs and fuel receipts. Dispatch and accounting send them, you receive them. Another 15% is moving data into the software, mechanical work. And only 5% is actual head work, figuring out where a state will refund money and where it will take. I'll walk you through in that order, documents first, then software, then the nuances. Within a couple of quarters, you'll be closing a 5-10 truck fleet in 1-2 hours. I've seen this many times. Get it once. Hold the core idea in your head, and the whole chapter will line up. Every state bakes its own fuel tax index into the price of diesel, a tax for using its roads. The logic is simple. You bought fuel from me, so you paid for my roads. But what if you bought 500 gallons in cheap Ohio and then drove 2,000 miles on the expensive California highway? That's where IFTA redistribution kicks in. You bought fuel in one state. You drove through another. IFTA calculates how many gallons you should have bought in each state based on actual miles and compares it to what you really bought. Bought more, the state refunds the tax to you, credit. Bought less, you pay the difference. IFTA isn't a shakedown, it's fair redistribution among states. And that's exactly why a sharp safety manager can save the company real money by telling them where to fuel up. The formula. Understand it, don't memorize it. 1. Average MPG equals total miles, total gallons. Example, 22,000 miles over 4,000 gallons equals 5.5 MPG. 2. Computed gallons for state X equals miles in X over average MPG. 3. Balance for state X equals gallons purchased minus computed gallons. Positive, state refunds, balance times index. Negative, you pay, balance times index. That's it. That's the heart of IFTA. The software does the math, but you have to understand how it works, so you can explain to the owner where the number on the invoice came from. 8.3. 3 stacks of documents you can't skip. For IFTA calculation, you need 3 things. 1. Loads. The primary freight document is the bill of lading, BOL. FMCSA recognizes BOL as the only reliable proof that the truck actually picked up freight at point A and delivered to point B. A rate confirmation, the broker's paper, is a contract. Locations there can diverge from reality. For IFTA, go by BOL only. What you pull off each BOL: pickup date, pickup location, city plus state; delivery date, delivery location, city plus state; BOL number or shipper number if BOL number is missing. The output is a load report, sample and blank template in the book materials pack, truckernavi.com/book. Sample in the book materials pack, truckernavi.com/book. Trap. Freight bill, does a decal ship to? BOLs often have a freight bill to field. That's the address of whoever pays for the freight. It is not the delivery location. Rookies trip on this all the time. Use only ship from and ship to consignee. 2. Fuel receipts. For every fuel purchase: date, station and location, city, state; fuel type, truck plate number; gallons, price per gallon in total; driver's name. The company is required to keep original receipts or scans. That's its shield in case of audit. Sample in the book materials pack, truckernavi.com/book. 3. Miles. 3 ways: GPS, ELD, automatic, but if the device disconnected, you've got a hole in the report. Mileage calculator in the IFTA software computes from loads and fuel stops. Paper logs, ancient, almost nobody uses them. In practice, the most reliable path is to compute miles in the software based on load report plus fuel report. That gives you a verifiable route you can put on an auditor's desk without embarrassment. Sample in the book materials pack, truckernavi.com/book. Now, 8.4. Step-by-step load report. Take every BOL for the month, say September, and turn it into a table. Word, 5 columns. Pickup date, pickup location, delivery date, delivery location, BOL number. 1. Look at ship from, enter it in pickup location, city plus state. 2. Look at ship to consignee, enter it in delivery location. 3. Dates. If the BOL has no date, leave it blank. Reconstruct from the chain. The next pickup can't be earlier than the previous delivery. 4. BOL number, copy as is. No BOL, use the shipper number. If you see 2 different deliveries on one trailer, that's a split load, 2 separate loads. Enter both. If the BOL location is unclear, Google the shipper's name, Electrolux Home Products LaGrange. 80% of the time the location shows up in a minute. That's a working technique. Don't be shy about using it. First time doing a load report. 1. Lay out all BOLs for the month in chronological order. 2. Pencil in numbers 1, 2, 3. 3. Enter one at a time. Don't jump around. 4. No date. Reconstruct by chain logic. 5. Checkmark each processed BOL so you don't lose your place. First month, 2 to 3 hours. By the third, you'll be down to 30 to 40 minutes. This isn't talent, it's reps. 8.5. Step-by-step fuel report. Your input is an Excel file with every fuel purchase. The fuel card vendor exports it. Com data, EFS, pilot, etc. The job is to roll up gallons by state. Algorithm. 1. Open the export. 2. First state, say Indiana. Control F, Indiana. 3. Sum gallons for Indiana into the final table. 4. Highlight all Indiana rows in color so you know that state is closed. 5. Next state, Mississippi. Same drill. 6. If a state appears in scattered clusters, Nevada shows up twice. Highlight all its rows anyway before moving on. 7. Rounding. Equals 0.50, up. Less than 0.50, down. 247.65, 248. 247.41, 247. The output is a short table. State, gallons. Indiana, 248. Mississippi, 342. Missouri, 84, and total 1,795. That table goes into the IFTA software. 8.6. Calculating miles in the miles calculator. Load report and fuel report ready. Open the IFTA software, for example, the Trucker Navi Safety Software module, IFTA, miles. Algorithm, 1. Pick quarter, month, truck. 2. First pair, pickup location, delivery location. 3. The software builds the route and breaks miles down by state. 4. Save the route. 5. Next pair, the previous delivery point automatically becomes the start. Deadhead miles are counted. Enter the new pickup and delivery. Long loads, the fuel stop rule. If a load is over 1,000 miles, insert an intermediate point. Why? Any map, Google, your software, builds the optimal route, but the driver may have taken a different road, wherever he needed to fuel. Without that intermediate point, miles won't match reality. Technique: open the fuel report, see where the driver actually fueled in that window, and drop that location as the intermediate stop. Deadhead: between a delivery and the next pickup, the distance shouldn't be more than about 500 miles. No sane dispatcher runs an empty truck further. It's expensive. If the miles calculator shows 800 miles of deadhead, you've got an error somewhere. A short load was skipped, a wrong location. Go check. Split load: 2 pickup locations in 1 trailer with a single delivery. Most software won't let you enter 2 identical deliveries. Fix: first pickup plus the shared delivery, with the second pickup dropped in as an intermediate point between them. Miles recalculate correctly. Once all month's loads are entered, save. The software outputs the result, miles per state. That's the deliverable from this stage. 8.7. Gallons and automatic calculation. Same place, in the IFTA software, IFTA, gallons. 1. Download the template, download example. 2. Enter gallons by state, from 8.5. 3. Upload back. The software verifies the total and auto-calculates. Average MPG, computed gallons per state. Balance, credit or owed. Tax amount at the current fuel tax index for each state. Indexes are updated quarterly on the IFTA Inc. website, ifth.org. Decent software pulls them in automatically. 8.8. How to read the final report. Payment, report, download the summary. Let's walk through 3 typical cases. Case 1. State refunds, credit. Alabama, Q3. Miles 611. Gallons purchased, 483. Company average MPG, 6.79. Computed gallons, 611 over 6.79, approximately 90. Balance, 483 minus 90 is plus 393 gallons. Bought more than needed. Alabama index, 25 cents. Credit, 393 times 25 cents equals $98.25 refunded to you. Case 2. State collects, California, 2,322. Purchased, 2,328. Computed, 18,322 over 6.79, approximately 2,698. Balance, 2,328 minus 270 gallons. California index, 0.979, 2026, one of the highest in the country. Owed, 370 times 0.979, approximately $362.23. Case 3. Surcharge. 3 states, Virginia, Kentucky, Indiana, have 2 indexes, main and surcharge. The main one is calculated with the standard formula. The surcharge is simpler. Gallons purchased times surcharge index. Example: Virginia, main 0.202, surcharge 0.068. 968 gallons times 0.068, $65.82 surcharge, on top of the main calculation. The indexes in these examples are as of the time of calculation. They change every quarter. Pull current rates from ifth.org before you file. The move that saves real money. Watch the balance per state. If in Ohio, you're running 34,000 miles and buying 8,000 gallons at cheap diesel and computed at 5,000, the state refunds you 3,000 times 0.47, equals $1,410 credit. Conversely, underfueling in California costs you hundreds. Message for dispatchers: fuel in states with cheap diesel and a high index. Ohio, Indiana. Don't underfuel in expensive ones. California, Pennsylvania, Illinois. This isn't magic, it's index arithmetic. Sample: in the book materials pack, truckernavi.com/n/book. 8.9. The 4 special states. This is the most disliked part of IFTA. 4 states require separate payment for miles, on top of the general IFTA return. You need to know them by name. New York, NYHUT, highway use tax. Permit plus decal, sticker on the truck, required. Permit, $1.50, via the Oscar portal, oscar.ny.gov. Miles are paid on a separate portal, NY tax, highway use tax web file. By default, quarterly. The tax department itself moves you to monthly filing if your HUT liability for the preceding calendar year exceeded $12,000, and allows annual filing if it was $250 or less. Driving without a decal, fine starting at $150. About decals: each sticker is tied to a specific truck's plate number. Mix them up, and the DOT officer on the road will write a ticket. Make it a rule: the driver puts the decal on and sends you a photo of it applied. That way you verify and don't rely on memory. Opening the NY tax account. Credentials can only be obtained by the company owner and only in person by phone. A safety manager can't make that call. They won't accept your info. Prep the packet, have the owner make the call. Kentucky. KWD, Kentucky Weight Distance. Portal: Kentucky Motor Carrier Portal. Permit is free, this is truck enrollment. Miles, quarterly. There's a surcharge, remember, from 8.8. You also pay for gallons purchased in KY. So Kentucky clips you 3 times. General IFTA, plus surcharge on gallons, plus KWD on miles. New Mexico, NMWDT, weight distance tax. Portal: New Mexico Taxpayer Access Point. Permit $10.20 per truck. Miles, quarterly. The form has a field: New Mexico Port of Entry miles paid. If the driver bought a temporary permit at the border, say, for 1,000 miles, those miles are not paid again. Otherwise you pay twice. Look at this one carefully. Oregon, weight mile tax. The toughest state. Portal: Oregon Trucking Online. Truck enrollment, free, since 2019. Miles, monthly. For new companies there's no other option, monthly only. Oregon never refunds fuel overpayments, never. Bought 100 gallons there, drove 100 miles, the surplus stays with the state, plus weight mile tax on top. The toughest audit in the country. Port of entry at every crossing, cameras, every fuel stop registers the truck. If you report 100 miles, but the system sees you enter through Ontario and exited through Portland 380 miles, audit is coming. Ironclad Oregon rules. Don't underreport miles. Don't pay port of entry permit miles twice. File every month. Save every confirmation. 4 rules, don't break any of them. Other things that sometimes come up: Connecticut HUT. Since 2023, it has its own weight distance tax. New Jersey, Pennsylvania, no separate IFTA permits. Everything goes through general IFTA. IFTA license, basic annual, renewed once a year, usually in January. IFTA decals, for the calendar year. 8.10. December renewal month. In December, the safety manager closes out. 1. IFTA license for the base state, renew. 2. IFTA decals for every truck, renew. 3. NYHUT plus NY decals, renew. 4. Kentucky enrollment, confirm. 5. New Mexico permits, extend. 6. Oregon enrollment, verify. 7. UCR, Unified Carrier Registration, a separate beast, also December-January. Miss a renewal and the truck stops. In Oregon, the port of entry won't sell diesel without an active permit. The driver gets turned around. Then the cascade: downtime, missed load, broker claim. 8.11. Folders and audit defense. A structure that works. 2024. Q1, loads. Q2, Q3, Q4, reports. Q5, payments. Q6, Q3, Q4. In overpayments sits base IFTA confirmation. Confirmations for NY tax, Oregon monthly, Kentucky, New Mexico. PDF or screenshot with the payment date stamp. Why so strict? A state payment portal can eat a transaction. A month later, a late fee shows up. Your only defense is a confirmation with a date. No confirmation, you pay. I've seen this many times, and every time it's money you didn't have to lose. Save it immediately. Don't put it off. 8.12. 2 tracks. Who runs IFTA how? For owners, track A, owner, 1 to 3 trucks. Running IFTA yourself is doable. Real numbers. Gathering BOLs plus fuel for the quarter, 4 to 8 hours. Entering into software and reconciling, 2 to 4 hours. Paying the 4 special states, if applicable, another 2 to 3 hours. Total half a day to a full day at the end of every quarter. Upside, you see where the fleet is losing money and can direct drivers on where to fuel. Downside, I see regularly. By Q2 it becomes, I'll get to it later. And later means late fee. For staff safety managers, track B, employed safety. You've got 530 companies. IFTA is your steady quarterly cycle. January, April, July, October. Weeks at the limit, scheduled by the day. 1 to 2 weeks before the deadline, every company should be closed out. Mandatory checklist per company. Submitted plus paid. The key skill is not flinching at big numbers. $15,000 owed on 30 trucks? Normal. $3,000 credit? Normal. Now if the average MPG came out at 2.5 or 15, that's an anomaly, which means an error in the data. Stop and check. 3 scenarios. How it plays out for staff safety managers. Smooth scenario, fleet of 5 trucks. Dispatch drops BOLs into a shared cloud folder every week. Comdata auto-exports Excel on the 1st. The safety closes out the previous month between the 3rd and 5th. Load report plus fuel report plus miles. In early April, July, October, January, 2 hours to submit and pay. 3 years without a late fee. No audits. Typical scenario, fleet of 8 trucks. Dispatch sends BOLs in batches every 2 weeks. Some get lost. The safety sits down 10 days before the deadline, discovers a week of BOLs is missing on 2 trucks, and goes to shake them out of dispatch. Files the day before the deadline. Occasionally catches a $50, $200 late fee on a missed Oregon. Survives. Failure scenario, fleet of 12 trucks. Owner runs IFTA himself. Q1 not filed. No time. Q2 not filed. I'll do it together with Q1. Letter arrives. IFTA license suspended. Driver gets pulled over in Oregon. No active permit. $500 fine and a day of downtime. Freight delayed. Broker rolls in a $2,500 claim. Total late fees, fines, penalties, $6,000 plus. Cost of having a safety manager run IFTA, $300 per quarter. The arithmetic speaks for itself. Key takeaway. Chapter 8, Takeaway 1. IFTA, Quarterly Fuel Tax Report to the Base State. 1 license instead of permits in 48 states and 10 provinces. 2. 4 deadlines. April 30th, July 31st, October 31st, January 31st. A miss is a late fee and suspension risk. 3. Documents. Load report from BOLs plus fuel report from receipts plus mileage from software. 4. Formula. Average MPG equals miles, gallons. State balance equals purchased, miles, average MPG, plus credit, minus overdue. 4 special states. New York, NY HUT. Kentucky, KWD. New Mexico, WDT. Oregon, weight mile. Oregon is the strictest. Monthly filings, tough audits, no refunds on overpayment. December, renewal, IFTA license, decals, NY HUT, Kentucky, New Mexico, Oregon, UCR. Keep payment confirmations. That's your only defense against lost transactions. Checklist. Checklist. Quarterly IFTA cycle. 2 weeks before deadline. All BOLs for the quarter collected. All fuel receipts exported from the fuel card. Load report per truck. Fuel report, gallons per state per truck. Miles calculated in the miles calculator, with intermediate fuel stops on long loads. Average MPG within normal range, 5.8 for Class 8 diesel. Quarterly report generated in the software 3 to 5 days before deadline. Main IFTA filed and paid to the base state. NY HUT paid if there were miles in NY. Kentucky paid if there were miles in KY. New Mexico paid if there were miles in NM. Oregon, all 3 months of the quarter paid if there were miles in OR. All confirmations saved in QX, 04 payments / December renewal. IFTA license renewed. IFTA decals, fresh on every truck. NY HUT, plus NY decals renewed. Kentucky enrollment confirmed. New Mexico permits extended. Oregon enrollment active. UCR paid. You've got Chapter 8 if you can explain IFTA to someone outside trucking. You remember the 4 deadlines without looking them up. You understand the average MPG formula and the per-state balance logic. You know the 3 documents needed for the calculation. You can tell a BOL from a rate confirmation and know why IFTA goes by BOL only. You can name the 4 special states and explain what makes each one special. You understand why Oregon is its own story and how to stay off their audit list. You remember that December is renewal month. IFTA, the kind of routine that's a bad use of an owner's time, fleet of 1 to 3 trucks, filing IFTA yourself, eats 1 to 2 workdays at the end of every quarter. Fleet of 5+, a week, plus the 4 special states, monthly Oregon, December renewal. Total 40 to 60 hours per year per company. That's your own time, multiply it by your hourly rate. Trucker Navi runs IFTA end-to-end. Load and receipt collection, load report, fuel report, miles calculator, filing with the base state, NY HUT, Kentucky, New Mexico, Oregon payments, confirmation storage. Price, $100 month or $300 quarter. Annual is the better deal. Fleets of 10+ trucks, custom quote. What you get? 0 late fees and suspensions. Ready reports for any quarter in case of audit. Advice on where to fuel so the index works in your favor. December renewal of the 4 special states, included. 315-871-0833. WhatsApp +1 929-347-4410. Data at truckernavi.com, truckernavi.com. Offices, NY, NJ, FL. Awesome. That was a chapter from Safety Manager, From Zero to Expert, by Dmitry Borovoy, founder of Trucker Navi. The full book is on Amazon. The companion page is at truckernavi.com/en/book.